Okay, guys, I am going to walk you through this question 6 in your book, page 144, and you were working out the universal social charge for me for each of these people here who are James and Celine. Okay, so you might recall, first of all, before we do any more, universal social charge, that is a tax charged by the government on everyone's income. It was brought in a few years ago, and there's different rates depending on how much income you earn. Okay, now this is found in your book, so these are the charges in Ireland for this. So there's 0.5%, 2%, 4.5%, and 8%, and it very much depends on how much money you actually earn in your gross salary. So when you look at this one, and this is something I should have mentioned yesterday. It's kind of a technicality, and really it should have been highlighted in the book, to be honest. Okay, um, and the technicality is this: universal social charge is charged on a person's individual income. Okay, so presumably James and Celine have different jobs and they're earning different salaries. So on their individual salary, they will be charged their universal social charge. Okay. The problem with this question here, though, is that James and Celine have a combined annual income of 152,000 euro. We don't actually know how much they're earning individually. So we have to make an assumption. Okay. And the assumption is this, that if we split their income in two, okay, then we will determine how much money they are making in their salary per year. Okay, so I'm going to take 152,000 and I'm going to divide it evenly between them. Okay, that's going to be divided by 2. Okay, and that'll give me an answer there for how much money I'm going to work out for the purposes of PRSI for each individual person here in the couple. So 152,000 divided by 2, and you should end up with a value there of 76,000 euro. So for the purposes of this question, this is what we're going to use as the gross salary of each individual person. Now, if you work this out and you worked out the universal social charge for the combined income, then guys, as long as you have the method, that's grand. But just know for future, for couples, there's a technicality. So what I'm going to do now is I'm going to go and work out the universal social charge contributions at each bracket that they have to pay. And we have to do this for both James and for Celine. So we're going to start here with James. Okay, James. So James here is paying here definitely in all of the brackets. He has 12,012 euro in the first bracket. He's definitely earning 19,874. He's definitely earning 70,000, and he's definitely earning above 70,044 cent or 44 euro. We can see that here in his salary. So he's going to have to pay in each of these brackets. So we're going to number these. So we're going to start off here with number 1, which is the first one, which is 12,000 euro. So for the first 12,000 euro and 12 euro, he's being charged here at 0.5%. Okay, so that is the first charge he has to pay. The next charge he has to pay is, if we look at this, so we take 19,874. So 19,874 minus the 12,012 euro to see how much money is being charged here at this level. And when I worked it out in my calculator, I'm getting 7,862 euro, and that's going to be multiplied by this rate, which is 2%. Okay, so again, we have now worked out the second band that he has to pay money at. Okay, that's number 2. Number 3, and we have then finally number 4. So number 3, if we look at it, he's definitely also hitting this brand. So what we have to do there is take 70,000 euro, and from this 70,044 euro, I should say, subtract from that 19,874, and again, this amount of money is being charged at 4.5%. So the amount I got in my calculator there was 50,170 euro, and that's being charged at 4.5%. Okay, so again, that's that amount of money there. For you can see how the money's kind of dwindling away. Right, the next and final band. Now, to figure this one out, is his balance over 70,044 euro? It is, and it is at 76,000. So what we do there is take 76,000 minus and then 70,044 euro. Okay, you should have got a value there of 5,956 euro, and that is times the top rate, which is 8%. Now, when I look at this here, those are my two charges, and I'm just now going to have to work out those values. So these are all going to be equal to some amount of euros, and let's work it out for James. So 12,012 euro multiplied by 0.5, and then that's percent. And I'm getting a value there of 60 euro and 6 cents. 60 euro and 6 cents. Next one. I have 7,862 multiplied by 2, that's percent. Again, I'm getting a value here of 157, and that's 0.24 cent. Next band up, I have 50,000 euro, 170 multiplied by 4.5%. I'm getting a value this time of 2,257 euro, and finally 0.64 cent. Right, that's not appearing on the screen. I'm just going to reload that screen there so you can see what we have to date. And finally, the last 5,956 euro multiplied by 8%. And I'm getting a value there of 476 euro. I'll just write it up there, 476 euro 0.48 cent. Okay, so that is the total amount of charges there in terms of universal social charge, but just on James's income. Okay, so what I need to do with this is I need to actually add all of these numbers up, and I'll get a value then in terms of money for universal social charge for James's income. So popping it into our calculator, 2257.64 plus 157.24 plus 60.06. I'm going to get a total value there of 2,951.42. Right, that is for universal social charge on James's income. However, if you think about this and what we did at the start of this question, what we did was we made an assumption that they both had the same income. So for if we look at Celine's income, the same universal social charge should be charged on that, okay, as James. So the answer there for Celine's is also going to be 2,951.42. So if I want to figure out the total, and this question we were told to work out the total USC for the year, what I need to do is either add them up or I could multiply one of them by 2. So the value you get for this, and let's write in this is USC, total USC for both Celine and James. That's going to be that number multiplied by 2, and I'm getting a value there of 5,902.84 euro. Okay, now just looking at that for a second, what you should realize there is that the amount of money I suppose taxed on their universal social charge, if considering their income separately, is actually cheaper for them than if they were considering their income together for universal social charge. So it actually works out better for them to get the USC individually than it would on both of their incomes combined. But the assumption there, as we said at the very start, you had to make an assumption that their universal social charge was charged individually, because that's how universal social charge is charged. Right, so moving on from that, and I'm just going to have a quick look here and see did they do anything differently in the book. And I can see here that that no, they did exactly the same thing that we did here in the book. So, and they multiplied by 2 and they got their value there on that one. So what do we need to do next? We need to look back at this question 5, because our job is to understand something called PRSI today. Okay, PRSI, I glanced over this one the last day, and that's because we were introducing universal social charge. So I'm going to go back here. Oops, I'm going to go back here now and look at part A. Part A for Jamshead says, what is his PRSI contribution per week? Okay, so how do we work out PRSI? The first thing to state here is that in Ireland, we are all charged at the same rate of PRSI. Employees are charged at 4%, employers are charged at 10.75%. Do I expect you to remember those values? No, but do reference them in the book. So those values don't change. What you need to do here, first of all, in this question, if you're going to work this out per year or per week, first of all, you need to work it out per year. So we can see here that this person's salary here was 64,000 euro. So 64,000 euro. And how you work out PRSI is you multiply gross salary by the rate of PRSI, which in this case is 4%. So if I'm going to work that out per year, 64,000 multiplied by 4%, and I get a value there of 2,560 euro, and that is per year. So really important there that you recognize what you've just worked out. This is a year. We're not asked for the year though in this question, we're asked for the week. So you might be clever and realize that there are 52 weeks in the year. So what you do there is to work it out per week, you take 2,560, you divide by 52, and that'll give you the value per week then. So dividing that by 52, I get a value there of 49 euro and 23 cent. Okay, so that is per week. Actually, I think PRSI is actually a little bit easier to work out maybe than the universal social charge for the reason that the PRSI value doesn't change. It doesn't matter how much money you earn, you always pay 4%. Let's have a go now at this one here for James and Celine. You might have the book there in front of you and realize that you're asked to work out their total PRSI payment for the year. And it says, assume that there is a 52-week year. Okay, so again, what you do there is you basically take your, now this is different. Remember what I said a while ago that universal social charge is considered to be done individually, whereas pay-related social insurance now, because it is charged at the same rate, it doesn't matter what their combined income is or if it's done individually, they'll still be charged at the same amount. Okay, so what we do here is we take 152,000 and you multiply that by 4%, and that'll give you the value here for their pay-related social insurance on this. So 152,000 multiplied by 4%, and I'm getting a value there of 6,080 euro, and that is their pay-related social insurance for the year. And we're told in this question here to work it out for the year. Okay, so that's how you work out pay-related social insurance. You now should know a little bit more about universal social charge as well. So that has been universal social charge and pay-related social insurance. Any questions, let me know.